Hello and welcome to the Global View on this Tuesday. Well, longer-dated US Treasury yields rose as more Federal Reserve policymakers seek to temper expectations of rate cuts. Chicago Fed President Austin Goolsbee saying, "I thought there seemed to be some confusion about how the FOMC even works. We don't debate specific policy speculatively about the future." And Cleveland Fed President Loretta Mester saying the markets have jumped ahead to the end, saying the next phase is not when to reduce rates, even though that's where the markets are at. It's about how long do we need monetary policy to remain restrictive. Well, 10-year US Treasury yields rose to 3.95% and the 2-year little changed at 4.44. The US dollar eased against the euro but was higher against the yen. That's ahead of a decision by the Bank of Japan today. It could determine the timing of the end of the central bank's ultra-loose monetary policy. The Aussie dollar trading at 67.1 US cents. Well, earlier I caught up with Sarah Hughes from American Century for her outlook on sustainable investing in 2024 and the global shift towards renewables.
I think that the entire location of COP prior to it happening, really, there was a lot of controversy surrounding about it. But I think it's the first time that we actually had both sides of the table there. And you really need both sides of the table if you are going to transition. So while the language was a bit watered down from what many were hoping for, the fact that from we were sitting in an oil state and we got everyone to agree on a phase out, I think we have to look at some bit of the positive there and the momentum going forward. And we also thought, they really started with a bang with the loss and damage bill, but it's not always how you start the game. Sometimes it's how you finish it.
So, Sarah, when we look ahead to next year, 2024, what are those issues that are actually going to impact sustainable investment?
Yeah, so one area we're really focused on right now is focused around water. So we're seeing increasing water stress and drought on a global basis in all pockets of the world. And we're already seeing this reflected in security valuations, whether it's the sovereign debt of Panama that is suffering right now due to delays in the Panama Canal, all tied back to lack of fresh water uh, for their citizens, or whether it is something like the rise in AI that is significantly stressing water from a global basis. So interestingly, years ago, Microsoft had made a water commitment. They had made progress against that. However, this year with AI, we saw their water usage go up 34%. So it's an area we're increasingly focused on here at ACI.
What impact has the US Inflation Reduction Act had in regards to this investment that we're seeing in the renewable space?
Oh, it's had a significant impact here, particularly, and you can really see it and feel it sitting on the ground here in the US. So the US chose to attack climate a little bit differently, rather from a regulatory perspective, really focusing on subsidies and spurring economic activities and encouraging companies to invest more in renewables. I think there's a lot of conversation going into the election year on whether that will be pulled back a bit. I think it's a little bit misunderstood from a global perspective because many of the states that you're seeing benefit most from the Inflation Reduction Act are states generally that vote Republican. I think what is more of a concern and something we're looking into a lot more is that the program has been so successful that it's going to have potential knock-on impacts on the amount of US debt into the future.
All right, and as the name gives away, it's also a focus on inflation, trying to reduce that at the same time that we are seeing, obviously, more extreme weather events, as well as increasing risk, certainly as far as what's playing out with geopolitics. How is that all, I guess, contributing to how we look at that sustainable investment outlook?
Yeah, so for us, it's really, I think, we've talked about the transition and the energy transition so much. We feel like the word transition has actually gotten lost in a lot of the narrative. We always say that this has to be, it can't be a down elevator. It needs to be a down escalator on traditional fossil fuels and an up escalator on renewables. So we'll have significant geopolitical risk uh, before we'll have those impacts of climate. We are seeing it. We are seeing it happen, particularly here in the US with rising insurance premiums. We're seeing house affordability and valuations continue to drop. So this is not just a Wall Street issue anymore. It is really becoming Main Street, and it's hitting consumers where it hurts, right in their wallet.
Yeah, just to that point. So you're seeing this as perhaps more corporate driven rather than policy driven by governments at this point?
Um, I think you're starting to see the effects of policy work its way through, and I think historically, if you're going to look at it in terms of a carrot and a stick approach, there were a lot of sticks that were being used. However, with the IRA, that was really a carrot, and that has really spurred economic expansion. It has resulted in other jurisdictions, most notably Europe, have to respond with really promoting economic growth, not just cutting off or hitting with taxation.
I note that you saw ahead to this year, you were saying that you expected global sustainability regulations to converge, and that hasn't played out. What went on, and is that simply been delayed?
I think you saw a little bit of it play out with the ISSB and the formation of the ISSB, which took in the IFRS, SASB, and all the reporting frameworks. I had always said, I had predicted last year that we'd go from quicksand to concrete in terms of regulations from a global perspective. I don't think we're right there yet. We've gone a little bit from quicksand to quicker sand. But what we're seeing and what we're seeing of some of the regulatory bodies is really starting to converge. So if we just look at what we've seen out of the UK FCA with their framework for sustainable investments, if we just start with product labeling, you've seen the EU come out with similar language. You've seen the US, well, halfway to the finish line, come out and indicate very similar language. So we are hopeful we will see some global convergence as much as possible. And it's never going to be agreement across all the nations globally. And we, as a global asset manager, are used to working in this type of environment and working with our clients to meet the needs of their regulatory environments as
But
well.
you say there's a need there for those companies to disclose their sustainability related risks.
Yes, from our focus, we're focused. We're an active asset manager. We think more information is usually and generally better. So we would like some standardization across that disclosure, so we can really look at companies or investments on an apples to apples basis.
And Sarah, is greenwashing still a major issue that needs to be dealt with?
I think you're seeing two major issues. You have greenwashing, but the just as large of an issue is green hushing. And you're continuing to see that as there's increasing scrutiny from a regulatory perspective. We've seen ESG become politicized in some parts of the world. It's beyond just the US. And you're seeing people play down some of their green credentials. So green hushing, in my view, is becoming as large of a problem as greenwashing.
So overall, Sarah, how would you describe the sustainable investment opportunities for 2024?
I think there's some great opportunities when it comes to sustainable investing in 2024. And in our view, you can look across the sort of spectrum of different approaches to way to get in, whether it's best in class, where many of those names have been under a pall in this higher inflationary environment, or there's an area we like to focus on called best in progress, and those are the transitioning companies. So think of it as we call it Alpha Plus, creating traditional financial alpha as well as environmental and social alpha in a pickup format. And then you can go all the way down to the spectrum where you could go look at venture capital or private equity, where you're really seeing that great innovation, early stage to find solutions to these pressing sustainability issues. So really a focus less so on mitigation, and the direction of travel is toward adaptation and resilience and opportunities in those spaces.
Sarah Hughes from American Century. All right, let's just a quick check of where we're likely to open, around 0.1% higher according to SPY Futures. Stay with us, the open just a couple of minutes away.